One of the often overlooked jobs/careers in finance, and one that really only has one movie made about them, is the job of the risk analyst. Now, I am coming up on 2 years in this field, so in today's video, I thought I would give a comprehensive overview of the job of a risk analyst, from what it is that we do, the compensation, the work-life balance, common career trajectories, and lastly, what it takes to get a job in this field. Within an investment bank, there are many different types of risk functions, from credit risk, market risk, operational risk, the list goes on. But the type of risk analyst that I'll be talking about today is the market risk analyst. The type of risk analyst that sits on the trading floor of an investment bank and works with the sales and trading team in managing risks related to market fluctuations and the securities that the desk trades. In my case, for about a year and a half, I worked at a bulge bracket investment bank on their municipal bond trading desk, and for about a month on their equity trading desk. By the way, bulge bracket is just a slang term that essentially means the largest banks on Wall Street. Let's first talk about what exactly a risk manager does. The role of a risk manager actually quite varies, and I never would be doing the same thing every day. Now, while that was definitely a good thing, not everything I did was exactly fun or stimulating work. But we'll get to that in a second. So the way I'll lay out my responsibilities is in the percentages of time I spent doing them. The first 15% is simply keeping up with market news. This consisted of reading Bloomberg articles and news articles from other websites in order to stay updated on the recent developments within my specific market, but also the rest of the macro and geopolitical landscape. When I was covering municipal bonds, I would always keep track of how well the muni market was performing. I would always have a good sense of where muni yields were relative to treasuries, and as sort of an extension of that, I would always know where treasuries were trading and how credit markets were trading. Beyond that, I would also keep track of trends in the global economy, like where economic data such as inflation was trending, geopolitical developments like the war in Ukraine, central bank policy, and also what was going on in other markets such as equities. The next 15% is monitoring our desk's positions and conducting VAR and stress tests. This would involve looking at the current risk numbers and making sure that they were not too high, not too low, but right where we'd expect them. We would also monitor the VAR, which stands for value at risk, and it basically tells you how much money you would lose given a very large but unlikely market move. Lastly, we'd conduct stress tests on all our positions, which tells you what you stand to lose if certain scenarios were to occur. Say equity selling off 5% and volatility shooting up 10%, something like that. If any of the above numbers don't look like what we'd expect, we'd then do some investigation to see if it was a calculation error or if there's an actual large change in the portfolio. And if we do notice a calculation error, we would then talk to the technology and quant teams to fix this error, and that's where another about 15% of my time was spent. This was probably the least exciting part of the job, at least for me. It essentially just involves working with a team that codes and maintains the risk models to troubleshoot whatever's going wrong with the risk system. Usually the risk team will be the ones to identify the issue because we have an idea of what the actual position is, and then we'll relay that to the quant team to fix the model. Moving on to the next facet of the job, which takes the largest chunk of time, and that is doing ad hoc analysis. These pieces of analysis would vary from weekly presentations with my team and managing director to projects that would take a whole quarter to complete. The weekly presentations would often be about very relevant to the present day market related topics that we felt that our managing directors should be aware of. Topics range from doing statistical analysis to identify relationships between securities, trends in risk, profit and loss, research on market conditions, and much more. The quarter-long projects would involve creating very detailed research reports on parts of the market that the team may not know about or on certain market phenomena that occurred. And the purpose is to increase the team's knowledge base and also to identify potentially hidden risks in these less transparent parts of the market. For example, during my time covering municipal bonds, I put together a research report on a very niche product within the muni space, one that had a pretty complicated structure and was pretty unfamiliar to the rest of my team and to the risk department as a whole. It took me several months to complete, but once it was done, it could serve as a good resource for the rest of my team, as well as future risk managers that are covering this particular market. Doing this type of analytical work is easily one of the best parts of the job because you learn an incredible amount, it's intellectually stimulating, and it helps with your presentation skills. The next 10% is regulatory work, and specifically I'm talking about a quarterly process called CCAR, which stands for Comprehensive Capital Analysis and Review. Essentially, following 2008, the Fed now requires every large Wall Street bank to undergo a quarterly exercise in which we simulate shocks to our trading positions to see what the resulting losses could be, and if the bank would have enough capital to sustain operations during those times of financial stress. The whole process is incredibly complex and requires the cooperation of the entire risk department across every asset class in order to compile this list to then submit to the Fed. Needless to say, it's a very time-consuming and tedious process, and also probably one of the less exciting, but also very necessary and important parts of the job. Because risk managers are not always on call, I would say the last 15% of my time was spent simply learning and exploring my curiosities. This was heavily encouraged by my previous company, and they frequently had extra training programs, seminars to develop our presentation skills, learn about different markets, learn how to code, and much more. And this is really great because I was literally paid to develop my skills and expand my knowledge in whatever direction I wanted. I've noticed that in this job, you have to understand the market side of things, but it's also very beneficial for you to understand the tech side of things, which is why coding and learning how to automate tasks was heavily encouraged. So broadening your knowledge and skills was literally part of the job description. Next, let's talk a little bit about compensation. Now, these figures will be mostly from my own experience as well as talking to other people, but the base pay is usually the same as other roles on the trading floor like sales and trading, which by rough estimates would be about $100,000 to $120,000 for an analyst position and $150,000 to $200,000 for an associate position as of the making of this video. Naturally, these figures will vary by bank and also what level analyst and what level associate you are. And for reference, an analyst is typically someone 0 to 2 years out of school, and an associate is someone 3+ years out of school, or someone that is hired from a graduate program such as an MBA or master's. While there isn't much or any difference in the base pay, the bonus is where the biggest difference lies. Whereas some of the front office roles like investment banking, sales and trading could have bonuses reaching up to 100% of your base salary or even more, in a risk role you're looking more around 25 to 50% from what I've generally seen. Now, while the bonuses are smaller, there are trade-offs such as having a better work-life balance. On average, you're probably looking at around 40 to 60 hours per week working at an investment bank. The hours will really vary. Sometimes when the markets are just going crazy and it's all hands on deck, you might have to stay later to finish very urgent work, but I would say 95% of the time I would go in at around 7 to 8 and leave around 5 to 6 in the afternoon. And I never once had to work on the weekend, which is how I'm able to make these videos. In regards to career trajectory, the most common ones I've seen include, number one, obviously ascending the ranks as a risk analyst. You start off as an analyst, then you work your way up to associate, then VP, then MD, and then one day, who knows, maybe even the chief risk officer at your organization. Number two, moving to a sales or trading role. Because the role is so heavily integrated with the trading desk and the product and market knowledge remains the same, I've seen many people move to become a trader, a salesperson, or even do some kind of structuring role. Number three, and probably the least common, is pivoting to another finance role such as investment banking or asset management. I haven't seen many people do this, but there are definitely some. So you've come to the end of this video and you're thinking to yourself, hey, being a risk analyst doesn't seem like a bad choice. Well, here's a few quick things I would recommend to help you get a job in this field. Number one, study finance or economics or even something quantitative like statistics, math, or computer science. During my time in this job, I found that people that came in with a finance and econ background ended up learning the computer science and stats elements, and the people that came in with the stats and computer science background eventually ended up learning the finance part. And I think the most successful people in this field have some sort of blend of these skill sets. Number two, have a genuine interest in the financial markets. This job will have you looking at and learning about the markets for hours on end, so you better find the markets at least somewhat interesting. If you want to learn more about how to get a job on Wall Street, I would recommend checking out this video. Or if you're curious about my day-to-day lifestyle, check out these two videos. And as always, take care, and I'll see you guys in the next one.